Welcome back. You're still tuned in to Buy Now on Market Fatafat. This is a show where we discuss all the stocks that are buzzing in trade today. But first up, let's put the spotlight on RITES, where the company is in focus on the back of an order win. In fact, the company informed the exchanges that they've received letter of award from Ministry of Public Works, which is the Cooperative Republic of Guyana, for an order worth about $2.98 million. So on the back of this order win that has come through, the stock is in focus today. It has given up all of those morning gains, but despite that, just managing to hold on with some marginal amount of gains.
All right, moving on to the next counter that is in focus today, and that is Zee Entertainment that has sparked a 6% rally today. If you can put up the chart and see, it is cooled off from the day's highest point right now, but it is still nonetheless trading with gains of 3+%. Now, Zee Entertainment shares were in demand after the company announced a strategic partnership with Bullet, a content and a technology startup that's co-founded by Azim Lakhani and Saurabh Kushwaha. Now, Bullet has built India's first micro-drama app featuring short vertical format episodes aimed at younger audiences on the back of this tie-up, and of course with gamified layers, AI-backed content operations, and creator-first ecosystem. This is going to be augur very well for this partnership that Zee Entertainment has formed with Bullet. And on the back of this partnership, Zee Entertainment is up in a way 3.3% in trade.
The stock is in focus on the back of that, but shifting focus to Tata Consumer Products then, Rabinder, this particular stock is in focus on the back of some commentary that has come in from the annual report. Tell us, what does the management have to say with respect to its outlook?
Yes, Tata Consumer has released its annual report, and management said that they have maintained leadership in tea and salt business, expanding in healthcare and wellness, and the Sampann posted 5th straight year of the double-digit growth. They say that the tea sector, where the tea segment muted, but the salt segment remained a strong growth for the company. Strong growth, and the newer categories gained traction and improved profitability. They said that the Organic India and Capital Food boosted growth margin and added new channels, where the modern trade grew by approx 18% and e-commerce saw an uptick of approx 57% in FY25. They said that in FY25 the company has launched 3 to 4 new product in each month. And Motilal Oswal has come out with a note on this. They have maintained the buy rating with target price of ₹1360. They expect a revenue, EBITDA and PAT CAGR of 8%, 13% and 20% over FY25 to 27. A positive brokerage note and a positive annual report key takeaways. But the stock is not reacting positively, and stock is trading around flat level.
All right, moving on then. On his Europe trip, Commerce Minister Piyush Goyal had announced a free trade agreement with Switzerland, which marks a significant shift, with over 99% of Indian goods enjoying zero duty and new permanent access to Indian services in the country. Now, during this visit, the Madhwas caught up with the Bata Shoes CEO Sandeep Kataria to talk about the future roadmap and his take on trade jitters disrupting supply chains. Let's take a look.
We're always looking at growth opportunities, looking at new markets, and also growing our collection in the markets that we operate in, whether it's in Europe or whether it's in Latin America, Africa, South Asia or Southeast Asia, which are our markets. For India, it's been one of our largest markets and continues to be a very strong pipeline for sourcing, but also talent and design. What we've just now putting more focus on is getting our global design center, which is based in Italy, to also work very, very closely with the Indian team and actually have a hub in India to become a design center to produce products and designs for all our emerging markets, where India, I think, understands better.
With the Commerce Minister's visit, trade ties between India and Switzerland, we all know that there are various other trade agreement talks that are already happening with the EU. How do you look at all these developments as well?
See, this clearly opens up opportunity for us to import from India more freely and more also financially and commercially viably. For Europe, it's not such a problem for us start with, but there are other markets like the Middle East where it becomes much easier for us now.
Right. And with all this talk, of tariffs, of manufacturing in particular countries, how does this impact and how do you look at this particularly? Because India has always been talking about Make in India, and now we're looking at similar sort of voices coming in from the US. We're seeing similar sort of statements coming in the EU. How do you see all of this playing out?
EU and Western Europe or North America are not really relevant for us, so I wouldn't like to comment on that. But the reality is, for any company, supply chain is one very, very critical piece, and we need to continue to evaluate and see, review and check where our supply chain should come from. For us, where we have our own 15 plus factories around the world, that is a very important source of competitive advantage. So in many ways, what is happening could even work better for us because we already have manufacturing facilities in many of our top countries.
That's the word coming in from the CEO of Bata Shoes. But we also have a guest joining us on the show now, Ashish Kyal, founder and CEO, Wave Strategy Advisors. Ashish, thank you so much for taking your time out and joining us here today. And Gail, that's the first stock on our radar this afternoon. Tell us, what do charts indicate for Gas Authority of India?
Hi, afternoon to you and all the viewers. If you look at the overall market movement, I think it is GAIL is just giving a breakout. It has consolidated for nearly 2 months now and is giving a breakout on the upside in today's session. The overall tone looks positive for a move towards 210 on the upside, and on the downside, the support for the stock is around 190 levels.
All right, moving on from GAIL India on the charts. Kanishka, you picked up BEML for us. Tell us what's the news flow for BEML.
That's right. Now, BEML has entered into 3 licensing agreements with the Vehicles Research and Development Establishment, that is VRDE, which is the premier DRDO laboratory for the transfer of technology to manufacture critical mobility and support systems for the Indian Army's Armoured Corps. Now, under these agreements, BEML will indigenously develop and produce unit maintenance vehicle and unit repair vehicle for MBT Arjun and the full trailer for 70T tank transporter, which is equipped with an advanced hydraulic suspension system. Now, following this announcement, the stock is not seeing a lot of gains. It's trading about 0.2% higher.
Okay, so that's the view coming in on BEML, but shifting focus to the defense counter HAL, then Hindustan Aeronautics. Ashish, what is your view on the stock?
See, we can clearly see that there has been a lot of buzz around the defense stocks already. HAL, which was consolidating over the past 1 or 2 weeks, is giving a breakout, positive breakout out of a triangle pattern. The upside target for the same comes to around 5,400 levels. And on the downside, the support for the stock is going to be around 4,960.
Okay, so that's the view coming in on HAL. The stock is up 50% in the last 3 months. So that's the kind of run-up that we've seen in a whole host of defense and shipbuilding stocks, especially after Operation Sindoor. But shifting focus to pharma stocks then, and this is on the back of data for the month gone by, where IPM, the pharma market, grew by about 7.2% in the month of May, driven by price and new product launches that the industry saw. In fact, remember, this is the slowest growth that we have seen in the last 7 months, and IPM growth has been sub 10% over the last 19 months. And this month as well, the industry has reported a growth of just 7% on a year-on-year basis. Remember, Nomura has come out with a report on this. They say growth rate in May in line with 7 to 8% that was estimated, and in line with the previous month growth that the company or the industry had reported. And they believe that growth rate of branded generics is impacted by market share gains by trade generics and private label medicines. So that's the report that has come in for the entire sector. 7.2% growth is what the sector has reported, the Indian pharma market growth, and all of these stocks in focus on the back of that.
All right, so the pharma pack is in focus on the back of that, but we'll keep with the pharma names. And Ashish picked up granules for us, and this one has shown some great momentum in the last 1 month. It's up 18%. Do you see this positive momentum to continue from here on?
Up by 1% today also, and it has shown a spectacular move over past since the onwards of May 2025. The stock was at the lows of 430, and now it is quoting around 540 levels. But there is still a lot of room to catch up on the upside. The next hurdle on the upside comes to around 570. So we can expect the stock to go towards the level of 570, which is the previous swing. And on the downside, the support for the stock comes to around 525 levels.
Okay, so that's the view coming in on granules. India, but Tata Motors, Rabinder, some commentary that has come in from the analyst meet yesterday. Tell us what is the important takeaway and what are brokerage houses making of this?
Another Tata Group stock is in focus, where Tata Motors has from key takeaways coming in from Tata Motors analyst meet, wherein the company highlighted that a single-digit growth is likely in domestic CV and PV segment in FY26, and PV market share aimed at 16% in FY27 as compared to 13% in FY25. And Nuvama has come out with a note on where they have maintained their reduced rating with target price of rupees 670. They said that the muted demand outlook and the increasing marketing and sales promotion spends will lead a muted 3% EBITDA CAGR over FY25 to 27. And Motilal Oswal has also come out with a note where they have given a neutral call with target price of rupees 690. They say that the execution key amidst a weak CV and PV demand and JLR headwind persist, and the ambitious FY27 targets 40% CV share with the EBITDA in teens. The management refrains for FY26 guidance, and they expect 100 basis point margin compression at JLR by FY27. And the stock is up more than 2% in today's trading session.
Alright, moving on to the next counter, you picked out Deepak Fertilizers for us. Ashish, another counter which has been doing very well in the last 1 month, 19% gains. Today also it's trading up 1.5%. Do you see this counter clearly doing well from here on as well, and what are the levels to watch out for? Is it going to likely touch its 52-week high, because it's headed towards that, right?
Of course, I think the stock is just tad below the 52 weeks high, and I'm optimistic it will touch that. It will reach there again, and it has been showing a very impulsive rise, which is a third wave, and that shows that there is much more room to cover on the upside. There is no divergence yet on the momentum indicator, which shows that the momentum is still on way. We can expect the stock to reach towards the level of around 1680, and on the downside, the support for the stock is going to be around 1500 levels.
Okay, so that's the word coming in on Deepak Fertilizer. But HDFC Bank, Kanishka, some new news piece that came in just half an hour before we started the show, isn't it?
That's right. It's because the stock is in focus because launching a fresh attack on HDFC Bank MD and CEO Sashidhar Jagdishan, Leelavati Kirtilal Mehta Medical Trust, that is LKMM Trust, has said that the trust or its permanent trustee, Prashant Kishore Mehta, has no outstanding dues to the private bank. Now, LKMM said in a statement that it has never borrowed a single rupee from the bank, nor are they connected to the borrowing company, that is Splendor Gems, in question whatsoever. The trust has alleged that 2.05 crore rupees of bribe money paid to HDFC Bank MD to help Chetan Mehta Group remain illegally in control of the LKMM Trust. That's the reason why HDFC Bank shares are in focus today and currently trading over 0.5% lower.
That is time for us to slip into a short break. But before we slip into a short break, let's take a look at what Mahesh Patil, who's the CIO of Aditya Birla Sun Life AMC, has to say about the financial pack. Now, he finds banking valuations rather reasonable versus the long-term averages and expect them to grow in high single digits in FY26. Let's go across and listen to his take.
So now I think it's no longer in a territory where you can say it's undervalued. Okay, valuations are now more reasonable in compared to the long-term average. This year actually would be a period where you will see only a high single-digit kind of a bottom line growth for the banking sector as a whole. So that's not really going to really drive the stock re-rating from here. The real trigger for the banks now here will be the credit growth, because now it's no longer the supply side constraint which is there, right? From the deposit side, I think that's not a challenge. It's on the demand side. If the credit growth picks up, okay, in the say mid-teens, so then I think there's further scope for the banks to do well. NBFCs, yeah, probably would still be better off because there I think the rate cut cycle would act in their favor.
Welcome back. You're still tuned into Market Fatafat. This is a show where we discuss all the stocks that are buzzing in trade today. Ashish, Hindustan Copper is the next stock on your list, and recently the company also signed an MOU with rights for critical minerals manufacturing and production. But today also the stock is in focus. Tell us, what do charts indicate for this one?
Yeah, exactly. Hindustan Copper, if you look at it, the stock is up by more than 1.5% in today's session. and it has managed to give a breakout of the neckline which was at 240. So the overall undertone looks to be super bullish from here on, and we can expect the stock to reach towards the target level of around 285. So the one can use any kind of dips as buying opportunity for 285 as the target, and on the downside one can maintain a stop loss of around 253 levels.
All right, so that's Hind Copper on the charts. Coming to you, Kanishka, United Spirits is what you picked out for us. Tell us what's the news flow here.
That's right. The stock is in focus because a report says that Diageo is considering options for its ownership of the IPL cricket franchisee Royal Challengers Bengaluru. Now, the Bloomberg report, as I said, this is as per a Bloomberg report. Now, Diageo owns the team through its Indian unit, that is United Spirits, and may seek a valuation of as much as $2 billion as per the report. Now, remember, no decision is final yet. The British distiller has been holding discussions with potential advisors as it weighs possibilities, including a sale of the part or all of the club as per this report. Now, following the report, United Spirits shares have been rising over 1.5% in trade.
Okay, so United Spirits up 1.5% on the back of that. But BPCL, Ashish, tell us, where do you see the stock headed from here on? And oil marketing companies have been in focus because of the volatility that we've seen in oil prices. But 320 from here on, where do you see the stock price headed?
See, BPCL has been finding some short-term minor hurdle around 325 levels, but looks like after about 2 weeks of sideways action, it is about to break that level. So if BPCL manages to break 325, I think it is headed towards the level of around 345 on the upside. And on the downside, the support for the stock is around 312 levels.
All right, moving on then. From BPCL on the charts to Kanishka, you picked out Tech Mahindra for us. Tell us what's the news flow here.
It's because Tech Mahindra has announced that Lakshmanan Chidambaram, the president of Tech Mahindra Americas, the strategic vertical business, he'll retire on June 30th. Now, his exit may affect investor sentiment, especially in the company's US-based operations. Now, following this announcement, the stock hasn't actually reacted very negatively. It's up over 2% alongside its other IT peers.
Okay, so Tech Mahindra in focus up 2% on the back of this. But PFC, Ashish, where do you see this stock headed?
PFC has been the overall sector as a whole. If you look at the overall sector, that has been doing exceptionally well, and we can clearly see PFC is also trading around 431 levels. It has given a breakout 2 days back. It consolidated today and looks like a re-accumulation at the current levels. Also, the cycles are suggesting that the time is right for the stock to move up again. So we can expect a target of around 450 on the upside over near term. And on the downside, the support for the stock is around 420 levels.
Moving on then, for a quick programming note, Malabar Group, the parent company of Malabar Gold and Diamonds, declared a 150 crore CSR commitment for 2025-26 on World Hunger Day. Its flagship initiative, Hunger Free World, will now serve 70,000 meals daily across India and Zambia, a major leap from 2.5 crore meals served over the past 3 years, underscoring its commitment to the UN Sustainable Development Goal to Zero Hunger. Now, the announcement was made at a special event in Delhi, graced by the former Niti Aayog CEO and G20 Shipra Dr. Amitabh Kant, along with the Malabar Group Chairman MP Ahmed and other key dignitaries. Now, with 60% of its CSR budget focused on hunger and poverty, the group also supports education, healthcare, women empowerment, housing and disaster relief, staying true to the belief that business must serve the society.
But that's all the time we have on this edition of the show. Rapinder, Kanishka, Osho, who joined us in the first half of the show, thank you so much for taking your time out and joining us here today on ET Now. But shifting focus, and before we wind down, the National Highway Authority of India has for the first time outlined its strategy to monetize assets to unlock value and increase public-private partnership for developing infrastructure in India. The government is eyeing to raise about 40,000 crore rupees from this asset monetization scheme. My colleague Samir Dikshit is now joining us with more details. Samir, over to you.
NHAI, the National Highways Authority of India has for the first time came up with a strategy for the national asset monetization, for monetizing its asset. And this strategy, it aims to not just unlock the value, to not just increase the public-private partnership, but also to build a robust infrastructure in the country. And as per this strategy, what we are picking up, that government aims to monetize a span of a length of roughly around 1472 kilometers for FY 25-26, and NHAI targets aims to generate a value of somewhere around 40,000 crore by monetizing this 1472 kilometers of asset that spans in various states, whether it be West Bengal, Odisha, Telangana, Uttar Pradesh, Maharashtra, Gujarat. So across these many states, we have seen that there are a certain section of assets that NHAI targets to monetize. In addition to this, in the past also, NHAI has generated 1.4 lakh crore through the monetization of its asset that spans to over 6,100 kilometers of length. So with these sort of steps, NHAI aims not just to be financially more stable, but also to reduce the existing burden and thereafter to increase the fund basket as well. And this entire strategy aims to utilize three models. The first one is the TOT, which is the toll operated transfer. The second one is the InvIT, the investment trust model, and the third one is the securitization. So based on three models, the government or the NHAI aims to attract the public-private partnership and realize the real value of these assets. And in the same direction, we are also picking up from our sources that NHAI has got a asset base that is valued at somewhere around 3.5 to 4 lakh crore, and this entire strategy is completely in line with the India's national asset monetization plan for year 25 till 2030.
All right, with that, it's time to wind down on this edition of Market Fatafat. Ashish and I will take a leave. Thank you so much for tuning in.